Hello and a very warm welcome to another brand new video. Today we're going to be taking a closer look at copper mining stocks, and we'll be discussing whether these mining companies at their current valuation haven't already performed exceptionally well and perhaps run a bit hot, or if they are still a worthwhile purchase right now, yes or no. This is the central question. Are stocks expensive or cheap? Copper is and remains an exciting metal, but we mustn't forget that demand will certainly rise in the coming years, but it's also unlikely to skyrocket in the short term. So it's more of a long-term investment, a long-term bet, and that's something you always have to keep in mind. I am bullish on copper, but short-term actually, and I can say this as a spoiler, maybe not so much right now. Before we dive in, of course, the risk disclaimer. Everything I say does not constitute a buy or sell recommendation and is not financial advice, but merely my own opinion. Yes, we'll also take a look at the development of the copper price and copper mining stocks, because there's a very, very exciting development there. But before we look at that, let's first examine the copper price development. We can see this here in the chart, the weekly chart, and here we observe, yes, compared to other metals like gold, silver, etc., and also other metals such as platinum, palladium, nickel, copper has also performed quite well. Not as explosively as, for example, silver, but it's certainly not done badly. What we've observed in recent weeks, however, and this isn't just about copper, but the entire commodity market has shown a bit of weakness, is now also a clear sign of weakness that we're seeing here within the upward trend. Therefore, you must definitely exercise some caution with these stocks in the short term. And if you're planning a new entry, as I said, no investment advice. But if you're planning to invest in copper now, you might want to wait a bit, because I believe it can still go quite a bit lower, especially in the short term. The question now, of course, is that these copper mining stocks have already performed quite well. We will discuss that in just a moment. If we take a closer look at the individual mines, both in terms of chart analysis and fundamental analysis, but what becomes clearer when we take a look at the performance, here we can see the overview. Here we have the copper future and its performance over 3 months, 1 year, 5 years, and so on. And below that are the individual stocks we'll be discussing. And here we can clearly see, also compared to the copper mining ETF, and that's already a very, very good comparison, that the copper mining stocks have performed significantly better than the raw material or the underlying asset. And that in itself is already quite remarkable, and it could somewhat suggest that we might be experiencing a type of bubble here, which is precisely why at the current price level I actually state that copper has now become a little bit overheated. And so from that perspective, I'd be a bit cautious there when it comes to investing right now, or whether one shouldn't perhaps also consider then taking a few chips off the table, so to speak. As I said, not investment advice, but you can see here, for example, copper has risen by 21% over the past year on a performance basis. The global ex-copper miners ETF has risen by 113% in the same period. That's an enormous gap, a huge difference between the two, between these two figures. And this actually shows that when we look at the individual copper mining stocks, the situation appears more or less similar, indicating that we've actually gotten a bit overheated. And we see this not only in the price, but also in the valuation of these shares, especially when we consider, for example, a company like Freeport-McMoRan. Right, in relation to the copper price, the stock has performed similarly well. Yes, a similar movement. We've even seen a new all-time high here. So actually, from a chart perspective, it's not bad at all. So actually, a good signal. The stock is also holding up surprisingly well, it must be said, considering the current copper price performance. But if we take a look at the valuation, which is really the central point here, then we see we have a price to sales ratio of 3.6. Now, some might ask, is that a lot or a little? Well, we need to look a bit further back into history, and then we see a price to sales ratio of 3.6 is already quite expensive. Freeport-McMoRan last had that in 2021, and before that in 2007. So it didn't happen that often, and we are definitely in a very, very expensive range as far as the stock is concerned. For the PE ratio, it actually looks quite similar. There we have a price to earnings ratio of over 40. So this is anything but cheap. Therefore, I would also say when it comes to copper mining stocks, and especially Freeport-McMoRan, and it's similar for others, there then there's a significant risk that if copper prices fall, we'll see a correction there, and that this will then disproportionately affect copper mining stocks. So let's take a look at the other factors. From a fundamental perspective, I actually don't like Freeport-McMoRan all that much either. I actually explained that in one of my recent videos where I once said, okay, what's my favorite stock? My favorite copper mining stock. Spoiler, that's Savant Copper. We'll discuss that shortly. But what I don't like about Freeport is that we have a declining gross margin here, and it's been like that for a while now. Not just a small outlier, but actually accelerating compared to the last few quarters. Net profit margins are slightly down, actually more stable, and free cash flows, considering the high copper price, it's actually not good at all to see a negative free cash flow here now, which we actually last saw here at Freeport-McMoRan in March 2020. So fundamentally, I don't like the stock that much, or rather not as much as other copper mining stocks. For example, we have Savant Copper, and if we take a look at Savant Copper, we can actually see that the stock, that it's had an even more impressive run. As shown here in the logarithmic chart, it has already performed very, very exponentially. We're currently trading this stock at almost $200. And I really must definitively say, even though I truly like the stock fundamentally based on its fundamental data, its gross margin, net profit margin, free cash flow, etc., everything's great. Yes, these are truly excellent fundamental metrics, but the valuation is truly far, far too expensive. If we take a look at that, we see that the price to sales ratio here is currently around 13.5, and historically we were actually around 10. So one could almost speak of a bubble here, if you want to put it that way. And Surfing Copper is definitely a candidate here for us to experience a significant correction. And what a significant correction implies, I believe, is that we could easily see this stock in the upcoming months, quite possibly at $150. I think that simply a lot of future growth is already priced in here, in the sense of, yes, we now have AI data centers, etc. Well, robotics is also on its way. A great deal is already priced in beforehand, but it also needs to be reflected in the price of copper. And as long as that isn't evident in the copper price, and on the contrary, it might even correct further, then it's quite likely that this upward overvaluation, which we're currently observing with the stock, will also be relatively quickly reversed. And it wouldn't surprise me if we then also saw significantly lower prices than $150. So here, perhaps in the range of $120, we could see the stock again over time. And if we look at the chart here in general, then we also see, of course, that the stock is generally a volatile story, characterized by parabolic movements upwards, always followed by quite strong pullbacks. And if we look at the price to earnings ratio, I mentioned that XSHAF and copper actually have very, very good fundamental figures. Yes, we now have a PE ratio of also just over 43 to be precise. But if we look at its history, we have data here since 2006, then it's already very, very expensive. XSHAF and copper has actually only had that 3 times in the last decades. Well, you definitely can't call this an inexpensive stock, quite the opposite. For the next stock, the situation looks similar. Antofagasta is the stock. Here again, we are observing a very, very high valuation, and this trend extends across all copper mining stocks. As I've previously stated, it wouldn't surprise me if, when the copper price corrects, we also see the potential for a more significant pullback here. But the question is, what if the copper price doesn't correct? That's the million-dollar question, so to speak. Well, then it's possible that copper mining stocks, precisely because they've already priced in so much, will simply consolidate sideways even as the copper price rises. That would be the bullish scenario if we see a breakout in copper above the $6 mark here per pound. That would indeed be a possible scenario that I can certainly imagine for these particular shares. But fundamentally, for me, the risk-reward ratio for copper mining stocks is currently not right. So let's move on to the next stock. This is a Chinese company, also one of the largest copper producers. That is Zijin Mining. I hope I pronounced it correctly. And here again, a very, very parabolic price movement, one could almost say. And if we look at the valuation here, we also see we have an all-time high valuation at 3.3. The stock class saw that in 2011, but it came from a completely different level. And if we look at the last 10 years, the stock has actually never experienced anything like that. So this stock too is already quite overheated. However, regarding the PE ratio, it must be said here that because this is a Chinese stock, they are generally valued more cheaply. But if we look at its history, specifically over the last 5 years, we are already quite expensive at the upper end with a PE ratio of something around 23. This means it's also a very, very exciting stock for those who like China stocks, yes, who want to invest in them. I'm always a bit cautious about that because it can have geopolitical or general political risks that you never know. You don't truly own the shares through these ADRs, and that's why you have to be a bit more careful, in my opinion. But fundamentally a rock solid company, and that's truly very remarkable when looking at its fundamental key figures. We're seeing a consistent upward trend here in the gross profit margin, net profit margin, and free cash flow. That's already very, very impressive for a mining stock of this magnitude. So that's everything from my end. I truly hope you enjoyed this video, and I wish you all the very best until we meet again next time. Please feel free to check out these 2 videos right here, and also my financial calculator app over here, which offers 15 different financial calculators completely free, where you can run through a few different scenarios. And until next time, I wish you much success. All the best.